Hello everybody and welcome back to the channel. In today's video, we're going to be taking a look at Target stock and see if it will be a good investment to add to our portfolios. Now, Target is an American retail corporation that operates a chain of discount department stores and hypermarkets, which I really don't know what that is, but it's basically like a supermarket. Now, I personally love to shop at Target. They have great products. Although they're not the cheapest, I will say sometimes you do go to Target and you can see a toothbrush for like $20. Don't know why, but people are buying it because the company keeps increasing its revenue. So let's go ahead and deep dive into the numbers and see if this stock is worth investing. Just before we do that, let's take a look at some facts from Target. As you can see, they have 107 billion in total revenue. They do give back to their communities. That will be about 5%. And they own about 45 plus brands, which they sell at their Target stores. Now, keep in mind, this is a huge company. As we just saw, Target has a market cap of 48.42 billion. They have over 1,000 stores in the United States, actually more close to 2,000, over 400k members. This might be a good thing, it might not, depending how much they're spending and how much each of those members is giving back to the company. And this is something which is very important to me and I want you guys to take a look at, which is 75% of the US population lives within 10 miles of a Target. So that means that this company can be reached by a lot of people everywhere in the United States, even remote stores. Obviously, I guess this is just an average. Obviously, there's going to be people that are going to be living 20 miles or 30 miles, just like there's going to be people like myself that lives less than a mile from a Target. Now, if we take a look at the 1-year chart of this company, you can see it's down 36.95%, which is about $61. And this is one of the main reasons I'm looking to invest. Obviously, if we take a look at the 5-year chart, it's not that bad, but it's only an 8% increase. And obviously, the overall history of the chart, you can see it had its highest point of around 261, and now we are at the current price of $105. Now we are very close to the weekly low, which is 103 with 46 cents, and also this amazing and beautiful dividend yield of 4.24%. Not only that, with a very low PE ratio of 11.93. Now if we take a look at what the analysts are saying about Target, from a 5 rating they have a 3.67, 37 total analysts, 11 strong buys, 4 buys, 21 hold, with 1 sell and 0 strong sells. Now, as always, this isn't the intrinsic value we're going to be taking a look at, but this is what is forecasted for the stock to be worth: a high of 160, an average of 136, and a low of 100, which means we are very close to the low. And one of the reasons why this company has been falling in price is because, as you can see, the revenue kept increasing from 21 to 22, from 2022 to 2023, and then everything just started dropping a little bit back. Now keep in mind that this year's was always going to be after, because this is after when everybody, wasn't able to shop at stores. Everybody was shopping online, and then there was actually a huge wave of people going back to stores. This number was actually going to increase, but now if you can see, when the company's starting to stable again, it's a lot more than what it was in 2021. And also their net income had a huge jump again in the same year, 2022. It started decreasing a little bit, but it has been increasing ever since again, except between 2024 and 2025. Now if we take a look at the EPS and surprise estimates quarter over quarter, we can see that by 2025 they're going to be missing in Q1 of 2025, which they did, we just saw, and in Q3, but afterwards in Q4, and then at the start of 2026 after Q1, they are going to be positive in their earnings. At least that's what they're expected to do. Now, as always, an annual estimate and annual revenue, this is EPS. You do want this number to be increasing. Targets going from 2026 to 9.15 and 2027 to 9.87. Their revenue is increasing from 107 billion to 111 billion. Let's take a look at how safety their dividend is. Again, they're 4.24%, 56 years of dividend growth. That means this company can withstand any recession, anything that has happened in the US. For the past 56 years, they have maintained their dividend. Their 5-year growth rate is 11.23%, which is great. Their payout ratio is below 70%. We always want this to be below 70%. Currently, it's at 50.11%. Their annual payout, which means what you're going to be getting paid per stock, is $4.48. So what you've all been waiting for, let's go ahead and take a look at its intrinsic value. So first, we got to go ahead and put the ticker symbol TGT, and then we have to find the growth rate projection for Target. My favorite part of the video, you go ahead and type Target future growth rate projection. I usually like to use Simply Wall Street. As you can see, it's 4.9. We go back here, type 4.9, and this is what the intrinsic value gives you. Now, I barely use this formula. It's the analyst revised formula from Benjamin Graham. I think it's a little too conservative. There aren't a lot of stocks that are going to be reaching this price, although there are some in the market. I always like to use the updated Graham formula. As you can see, if you do decide to go by this formula, you can have an upside of 36% if the stock does reach the intrinsic value of $144 that is expected to. Keep in mind, the stock is currently at $105.67, but there's always a but. I like to buy with a margin of safety. That means it gives me some room to be wrong. It gives me some room to buy the stock now, for example, and then it dropped 30% and I'll be fine. So that's why I'm currently not planning to buy, but we are very close to my buy price of $93.68. And actually, I'm not even going to wait for $93.68. But guys, this is not financial advice. This is my own opinion. I think if this stock drops anywhere below 1 cent of $100, I might be investing in it. Now, if we take a look at the discounted cash flow for Target, we can see the intrinsic valuation would be 160. In the base case, the best case would be that the stock is worth 238, and the worst case, we're still going to be making some profit around 13%, and the stock will be worth $121. Now, I usually like to invest in companies that have a gross margin of 40% or over. Again, you have to do these numbers with a little bit of a grain of salt depending on the industry the stock you're investing in is in. I think 28% for a company like Target is very good. And if you take a look at every other part of the company in terms of efficiency, it's pretty much in the green. They do have to, better a little bit for it to be worth or be valued even better as in terms of the stock. I don't even know what I said there. I hope you guys can understand. What I mean is that they need to some way, somehow try to make more profits and increase these margins so that the company's numbers could be healthier or look healthier to an investor. Another thing I love about Target, is that they have more assets than liabilities. This is very good in a company. That means that they have more active income, such as, I don't know, stores or merchandise, etc., etc. In the case that they have to pay all these liabilities, they do have more assets to take care of that. Let me know what you guys think of this stock, guys. Do you think it will be dropping a lot more? Do you think Target is no longer I guess a good company to invest in due to the sector that is in? People are usually buying a lot more online now, but everybody needs food. Everybody loves to go shopping from time to time. So let me know what you think in the comments below. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.